students, so here is the another video for your online class, and I welcome you again to your class 11th for learning the subject commerce. Well students, we are continuing with the chapter classification of business activities, and today we will learn the topic aids to trade. In the previous video, in the previous online class, we have covered the first branch of commerce, that is trade, and so today we will learn the second branch of commerce, aids to trade. Aids to trade or auxiliaries to trade refers to the activities essential for smooth flow of goods from producers to consumers. These activities facilitate trade by removing various barriers in the buying and selling of goods. So aids to trade, it is just like a treatment, or we can say it is just like a help to have a smooth trade or smooth flow of goods from the factories or from the industries to the ultimate consumers. And there are various activities involved in aids to trade which helps to remove the barriers. Barriers means hindrance or the stoppage that comes between the smooth buying and selling of goods and services. The main aids to trade are the followings. The first one is transportation. Transportation refers to the conveyance of goods and passengers from one place to another. It facilitates trade by assembling and distributing goods. Goods are produced at one place and consumed at another place. So here the first aids to trade here is transportation. We all understand what the term transportation. Transportation means carrying or transporting goods and even the passengers from one place to another, wherever it has to be transported or carried to. And transportation, not only it functions as carrying or transporting the goods from one place to another, but it also assembles and distributes the good to different places, because the goods are produced at one place and consumption is done at various other places. For example, tea is produced mainly in Assam and West Bengal but is consumed all over the world. So example is given here. The tea production is done in the hilly areas in the like Assam, West Bengal, and even in some parts of Uttarakhand and some other parts of hill stations like in south. The tea are produced in a particular area, but it has been transported to all over the country and all over the world to be consumed by the consumers. Transportation brings the goods from the place of production to all the far and distant places of consumption. It helps the consumers in getting a wide variety of goods at reasonable prices. It promotes specialization of business activities. It overcomes the barrier of distance and creates place utility. So with the help of transportation, the goods from the place of production can be transported or brought to distant places of consumption. They don't have to take the factory there for consumption. With the help of transportation, the goods can reach to the consumers, and transportation not only helps to provide the produced goods from the place of production to the distant place for consumption, but it also provides a wide variety of goods at reasonable prices, and this helps to create place utility by removing the distance between the production center and the consumption place. Transport widens the market and helps to equalize prices at different places. So, the transportation, it widens the market. It widens the market means it brings the good available to all the consumers so easily that the prices on the goods can be equal, somehow equal at different places, because goods are now easily available with the help of transportation. Transport helps to increase the size and scale of business. Well-developed facilities of transport help industrial units to locate at the most economical places and grow to their optimum size. So, transport, it helps to increase the size and scale of business. Now, more well developed the transportation will be, the goods will easily reach to the consumers will demand more, and so the business production will be demanded, and so the size and scale of business will increase. And so here the well developed facility of transportation, it helps the business units to grow economically and increase their size and scale of business. Transport facilitates mutual cooperation and unity among people and nation. Thus, transport has become the lifeline of modern industry and trade. So, transport, not only it helps to transport goods from the place of production to the place of consumption, but also it helps the traders, the people doing the business, to travel and to go from one place to another, and they meet each other. There is mutual cooperation and unity among the people. They learn the living style, the habit, and they learn what people want and what are their demands, and this is all because of people can travel or they can move from one place to another with the help of transport. The second one is warehousing. Nowadays, goods are produced in anticipation of demand. It is therefore necessary to store and preserve the goods until they are sold. Many products such as wheat, sugar, rice, etc. are produced in a particular season, but they are needed throughout the year. So, the second aids to trade is warehousing. The producers usually they produce in anticipation. Anticipation means they just predict or they just estimate the demand, and so they produce in bulk, and now they need is what? Storage and place to preserve their goods until they are finally sold. Many products like agricultural products, sometimes while bumper cropping like wheat, sugar, rice, and usually the bumper cropping happens with the potatoes. These potatoes needs to be stored in the cold storage, because these agricultural goods are produced once in a season, at a particular season, and they are demanded and needed throughout the year. So these are stored in the huge food storage godowns like Food Corporation of India in the cold storage, and so warehousing becomes very necessary to store the goods and preserve it until they are finally sold out, and even to provide the goods like agricultural goods which can be stored for longer time and are demanded by the consumers all throughout the year. Proper storage arrangements must be made in order to make the goods available throughout the year. Besides It is necessary to store commodities such as woolen garments and umbrellas to meet the desired seasonal demand. Now, not only the agricultural goods has to be stored with a proper arrangement to make it available throughout the year, but even the commodities that are desired or that are wanted at seasonal demand. Now the production of woolen garments and umbrella, the production is not starts at the time of rainy season umbrella or at the time of winter season woolen garments. If they start production at that time, when will they sell? So just early to that they start production, and till the seasonal demand is there, they store these commodities in the warehouse. Warehousing removes the hindrance of time and thereby creates time utility. So we know what is time utility. Time utility is when goods are stored to be provided in those seasons, off seasons, or those seasons when it is demanded by the consumers. It helps to stabilize prices through equal distribution of surpluses over different time periods. So even the warehousing, it helps to stabilize the price of the goods by providing the goods, availability of goods is there, and they are able to provide the goods with the equal distribution over different periods of time. Warehouses are of three types, namely private, public and bonded. Private warehouses are owned by merchants, producers, wholesalers or distributors for their own storage needs. Public warehouses are owned by wharfingers, port trust, governmental bodies, etc. Bonded warehouses are set up by custom authorities to store goods which are liable to custom duty. So here warehouses are of three types: private, public and bonded. Private is for the own production or storage of own goods by the producers or merchants or wholesalers. Public by the wharfingers. Wharfingers are the place where the ships or the ships which carry goods, we can say it has been kept over there, or same as port trust, port like harbor or governmental bodies. And bonded warehouse are the warehouse set by the custom authority, and to get the goods from there you have to pay the custom duty. When the goods are imported from other country, the custom authorities have the warehouse, and from there when you take the goods you have to pay the custom duty. Next we have is insurance. Business involves several types of risk. Example, risk arising from price fluctuation, dishonesty of employee, bad debts, exchange rate fluctuation, loss of goods in transit and storage, fire, floods, etc. So the risk in the business can be of any time. Some can be covered, some cannot be covered, and we cannot predict the risk that this is for sure is going to happen. It can come anytime. Price fluctuation. As a seller, as a business personnel, you have decided to produce a good whose prices, of which prices is higher in the market, and finally when you want to sell it out, the price fluctuates and the price falls, or the value of rupee it falls because of the exchange rate of fluctuation, and maybe because you are cheated because of the dishonesty and fraud act of your worker or your cashier, or there can be any bad debts. Some of your customers haven't paid you money, or there can be loss of goods in transit or storage due to fire, accident, flood, etc. So there can be many different types of risk that you can think of. Insurance removes the hindrance of risk. With the help of insurance, a businessman can protect himself from several types of risk. So insurance, it helps to remove the barrier or hindrance of risk. And with the help of insurance, when the businessman takes the insurance policy for the various type of protection from the fire, from accident, there are many types of insurance that we will be learning in the when we come to the end of the book. We'll be learning about different types of insurance, how a businessman can protect themselves from various type of risk by buying a insurance policy. Insurance is based on the principle of pooling of risk. A large number of people who are subject to particular risk contribute to common fund, out of which compensation is paid to those few who actually suffer loss. So insurance is based on the principle of pooling the risk. Pooling the risk means if you fall under the risk, you get the advantage. Here what does it mean? That everybody who wants to buy an insurance policy is paying the premium or money for insurance, but you will get only when there is any kind of damage. So common fund is been contributed, and those are compensated who are actually suffering the loss. So here principle of pooling the risk means you are taking the risk and you are getting the advantage only when you are suffering the risk and you're getting the contribution from the common fund. In this way, the amount of risk borne by an individual businessman is reduced by distributing the burden of loss over large number of persons. So in this way, the amount of risk borne by an individual is reduced. So you're getting the money from the common fund in which others are also contributing. So that burden is being distributed over large number of people. Okay. There are various types of insurance. Example, fire insurance, marine insurance, workers' compensation insurance, life insurance, etc. So fire insurance, when your house or factory or shop catches fire, it has been insured, you get the insurance money. Marine insurance, when your ship or the goods while transporting from one place to another in the dockyard in the ship meets with an accident or something happens, so you get a marine insurance. Workman compensation insurance, when you meet with an accident while working or you fall sick because of any pollution that is there while you are working. Life insurance, normal people also, they buy life insurance to ensure their life for their future family or for the others, for the benefit will be received by the people who becomes the nominee of the life insurance. Insurance facilitates expansion of trade by providing security against heavy risk. It helps businessmen to develop sense of security and freedom from anxiety. Businessmen can carry on their business with confidence and peace of mind. So insurance, it gives a confidence and peace of mind. Now the traders or the businessmen or the producers, now they can distribute their burden to other people by buying the insurance policy, and now they can be secured and free from anxiety or free from any tension of carrying on the business, and so now they can be more confident and have peace of mind in carrying the business. Next we have is banking and finance. There is usually a time gap between production or purchase and sale of goods. It takes time to collect money after sale of goods on credit. So the production and sale of goods, or when you purchase goods for selling the goods, there is a time gap. You don't sell all the goods that you have purchased, right? If you have purchased 100 pieces of cloth to be sold, it is not that in one day you will be able to sell it. So there is a time gap between the purchase, production and the sale, and it takes time to collect the money after the sale on credit. So even there is a time gap when you sell the goods on credit. It takes time to collect the money. During this period, businessmen need finance to carry on their business activities. Banks and other financial institutions provide funds and credit to businessmen. So business does not run only on the cash, it runs even on the credit. If you have to run your business, you have to believe on others to sell your goods on credit. But getting the money or collecting the money after selling the goods on credit takes time. But the business has to be carried on, the business activities has to be carried on. So the businessmen, they need finance. So they approach to the banks and other financial institutions who provide funds and credit loans to the businessmen. Production and distribution of goods and services on a large scale requires a huge amount of money at low rates of interest. Bank facilitates large scale and efficient business operations by providing cash and security. So the production, not only production but distributing the goods and services to different places requires a huge amount at a low rate of interest. Now when you take loan from the bank or financial institution, you have to pay them the loan amount plus the rate of interest. I think you must have learned in maths in your class 10th. And so the banks, they provide the business to work efficiently by providing them with cash and other securities. Banks also provide safe, quick and economical means for remittance of money from one place to another. They collect money from those who do need it and make the same available to businessmen. So bank not only provides loan, but it also provides safe and quick remittance or payment of money from the person who wants to pay or give it to the businessman for the goods purchased, or to do payment to anyone, any person, anywhere, living anywhere. Banks provide funds in various forms. Example, loans, overdraft, cash credit, discounting of bills, etc. So here banks, they provide funds in various forms, not only in the form of loans but even in the form of overdrafts, like excess amount can be withdrawn from your actual amount in your account, and this can be not with any account, it can be with the current account of institution or business, and the interest is been paid only on the amount which is overdrawn. Like if you have 10 lakh rupee in your account, and as a businessman from your current account you want to take 15 lakh rupee, so the excess amount that you withdraw 5 lakh rupee, on that you have to pay interest. Then we have got the cash credit. Cash credit is the arrangement made by the bank for the customers or the clients of the bank or the customers of the bank to withdraw excess amount than their account limit, and it is generally sanctioned for 1 year, but it may go up to 3 years, and the interest is charged only on the amount that is withdrawn by the customer, and the interest is not charged on the total amount sanctioned. So if your amount is sanctioned to 1 crore for 1 year or 3 years, so the amount that you keep on withdrawing, the interest will be charged on that amount. Discounting of bills. We have studied in accounts that sometimes goods are not been sold and purchased on cash, sometimes it is done on credit, and so the buyer gives a bills of exchange to the seller, that after a certain day or date the seller can go to the bank and get the amount by depositing that bill into the bank. But now the seller might need money before that particular date, so goes to the bank and gets the bill discounted. So even on that bill prior to the date, the money can be received on the bills before the date, but the bills amount will be discounted by the bank. So there are many various ways how the banks, they provide funds to the businessmen or to the merchants or to the producers to run their business. And so it is not only the loans, but there are even other ways how they provide the funds to the businessmen for running the business. Next we have is advertising and publicity. Advertising and publicity inform the consumers about the availability of various products and services. They remove the hindrance of knowledge. Advertising educates consumers about the use of products and provides them greater satisfaction. So advertising and publicity. How will the customer know about their product? What is the use of the product? When the goods are being advertised and the usage and the knowledge of the product and the various service is been provided to the customer. So advertising, it educates the consumers regarding the use of the product and tells them how they can be satisfied with the products. The main purpose of advertising is to create and sustain demand. In the absence of advertising, consumers may remain ignorant of availability of goods and services, and businessmen may not be able to sell their goods. So if there will be no advertising, just imagine there will be no advertising, nowhere in television, radio, newspaper, magazine, hoardings. So you don't know anything about any product that is coming out in the market. How will you buy it? How will the businessmen be able to sell the products unless the consumers are ignorant? Ignorant means they really don't know anything about the goods and services. So the advertising helps the consumer to learn and have knowledge about the goods and services provided, and so it makes it easy for the businessmen to sell their product. There are various forms of advertising and publicity such as press, outdoor displays, radio, television, fairs, exhibitions, etc. So we all know the various forms where advertising and publicity is been done. You have learned in your class 10th: press, outdoor display, radio, television, exhibitions, etc. Next we have is other aids. Proper packing of goods is essential for efficient trade. Packing attracts consumers to buy goods. Proper packing prevents damage to goods in the process of transport and warehousing. So the other aids to trade can be proper packing, which is very essential for good and efficient trade. Now packing sometimes does the 50% of the work by attracting the customers. When you have got the attractive packing of your product, the customers will be easily able to track it, and it will be easily visible on the shop rack, and the customer will demand it. And not only it attracts the consumers through the attractive packing, but also good packing prevents the goods in the process of transporting and while keeping in the warehouse. It helps removing the hindrance of risk by ensuring safety of goods. Modern means of communication like telephone, telex and postal service have become essential for the expansion of trade and industry. So not only packing, but even the modern way of the communication like telephone, talk between the seller and the buyer. So the buyer can know about the product and the seller can easily inform the buyer regarding the product, or any business can be done on the telephone. Telex. Telex is a system of communication in which messages are sent to a long distance by using a telephone, and a print is taken by a special machine called as teletypewriter. So here not only the message goes through the telephone, but through a special machine called as teletypewriter the message can be printed, and even through the postal service. So the business can be expanded, so like with the dealings can be done, which can be sent through the email and through the postal service, and so the business and the trade and industry can be expanded. Businessmen and their agents travel from place to place. They need eating, lodging and recreation facilities. Hotels, restaurants, cinema, theaters provide these facilities and thereby help buying and selling goods and services. So the other aids to trade, not only it is about the smooth running and flow of goods from one place to another, but even the businessmen and the agents to the business, they travel from one place to another. So they need some time to spend. They need to eat, stay somewhere, lodge somewhere, recreation. So hotel, restaurants, cinema, theaters and mall, and there are many other facilities which help them to get these services and goods. Now the aids to trade we have learned. So the first one, transportation. Second, warehousing. Third, insurance. Fourth, banking and finance. Fifth, advertising and publicity. And the last one, other aids like packing, communication, for the businessmen to stay, eat, lodge, for the recreation. And there are other aids even which helps to bring the goods in a smooth flow from the producer to the consumers. Now here is the difference between the industry, commerce and trade. So you can go through this, and I have written in a very easy way for you all to understand. You can just read through this, and if you're not able, you can just ask me anywhere where you're not able to understand. Relationship between commerce, trade and industry. Industry, commerce and trade are closely related to one another due to the following reasons. Industry produces goods and services, and commerce helps distribute goods and services provided by the industry. Thus, industry provides base for commerce and serves as the backbone for commerce. So, industry, it produces goods and services, and commerce, it helps to distribute. So, industry is the base for the commerce, because until unless there will be no production of goods, there cannot be distribution of goods. So, industry is the base and serves as a backbone for the commerce. Industrial production is meaningless without distribution of goods and services by commerce. Industry and commerce are interdependent on each other. Commerce provides support to industry by maintaining smooth flow from producers to consumer. So, industry and commerce are interdependent. Commerce supports industry by smooth flow from producer to consumer, and industry supports the commerce by producing the goods to be distributed. Trade provides the necessary support to industry by serving as a link between producers and consumers. It not only supports industry but also maintains smooth flow of commerce through activities such as transportation, warehousing, banking, insurance, etc. So, trade, it provides necessary support to industry by serving a link between producers and the consumers, and maintains a smooth flow of commerce through activities aid to trade like transportation, warehousing, banking, insurance, etc. So, here you can see industry, it provides base for the commerce, and the commerce, it provides outlet for the industry. Again, the industry, it provides base for the trade, and the trade, it provides outlet for the industry. And so, this is how they are been interlinked with each other. Economic basis of commerce. Economics is the basis of all commercial activities. Economics is concerned with the satisfaction of human wants. In order to satisfy human wants, goods and services are produced. Exchange of goods and services becomes necessary once goods are produced. So, economic is the basis of all commercial activities, and economics is concerned with the satisfaction of human wants. You are learning in your economics, right? And so, in order to satisfy these human wants, goods and service are to be produced, and once it has been produced, it is necessary to exchange these goods and services. In economics, all economic activities are studied. Human beings effort to earn their livelihood, creation and distribution of wealth, etc. So, in economics, we learn all the economic activity which deals with earning your money for livelihood, how you are creating and how the wealth is been distributed. Therefore, economics provide a theoretical background for analyzing commercial and industrial activities. Thus, commercial dealings takes place due to the following reasons. Difference in human wants. Human wants are unlimited, whereas resources available to satisfy them are limited. Commerce makes goods and services available at reasonable prices to their customers by providing them to their places from anywhere. So the commercial dealings, it takes place because of the different human wants which are unlimited. Not only it is unlimited, but it is also different at different places, and so the commerce, it makes the goods and services available at reasonable prices to their customer by providing these goods from the places from anywhere. Second, division of labor. Everyone specializes in activities in which he is most efficient. Likewise, every country, state, region also produces only those goods in which cost of production is less. This is called theory of comparative advantage of cost. Thus, division of labor gives rise to trade. So, division of labor is done when there is a specialization. Depending on what specialization the person has, he or she has, is more efficient, the division of labor is done. And so in the same way, every country, state, region, they also produce those goods in which they are more efficient, specialized, and in which the cost of production is less, which is called as theory of cost, theory of comparative advantage of cost. Suppose we have country A and country B. If country A can produce rice in less cost than country B, they will produce rice and sell to country B, because country B is producing rice at high cost. And when country B can produce wheat at low cost, they will take the advantage and they will produce wheat at less cost and take the advantage of selling it to country A. Thus, division of labor gives rise to trade. Uneven geographical distribution of resources. Natural resources are unevenly distributed in different regions and countries. A particular region or country cannot produce all its requirements due to non-availability of certain resources. Therefore, a region or country obtains those commodities which it cannot produce itself from other regions or countries. So, not only the difference in human want, division of labor, but uneven geographical distribution, like some regions can get availability of certain resources and some region cannot. So they use those resources which are available in their place to produce the goods and provide it to the other regions and countries where the goods are not been available. So this is how the commercial dealings takes place, which is related somewhere to the economics. And thank you for watching.